Good afternoon. How's everybody doing today? Jimmy Jackson, Realtor, Keller Williams, North, Team Take is man. So today I want to clear up another big misconception I hear all the time, guys, especially from first time home buyers. When people think about buying a home, the first thing they worry about is the down payment. A lot of buyers stop themselves before they even start because they think they need way more cash than they actually do. There's tons of home buying programs out there. They automatically think that they need 20% down to buy a home. Most people really believe that, but it's really not true. A down payment is simply the portion of the home that you're paying up front. The rest is financed through your mortgage. So, how much you need to put down depends on three main things: the type of loan that you get, your financial profile, which hopefully, if you've watched any of my old videos, I explain all that. If you go back and watch my video when I am talking about the interest on purchasing a home, it's not just based on the price of the property. I think I did that one last week. Yeah, go look on that, and that'll explain that. Um, if you have any questions on that, I post my videos on Tuesdays and Thursdays, so go back and look. That'll explain it. It'll make perfect sense. There's no one size fits all for a down payment, so it definitely varies. So it's just a common myth that you need 20% down. It's the biggest myth there is in real estate that it's required. So it's optional, it's not mandatory. It definitely can help you avoid a PMI, a private mortgage insurance on some loans, but it's not the entry ticket to home ownership. There's people who put 3 to 5% down. Those are FHA loans. People who put 0% down on VA or USDA or, you know, when you buy a home, you're bringing value to lenders because if you lose that home, they get, they get the home back. So if you get a home and you take out a loan for $300,000 and you pay $200,000 on that property and then you foreclose, the bank just made $200,000 off of you and then they get the home back. So they just made all that money off of you. And if the home is worth 350, 400,000 now because you owned it for 15 years, now they can sell it for 400,000. So essentially they made 400,000 plus you paid 200,000, that's 600,000. Plus, if they sell it for another 30-year mortgage, that 400,000, they'll make probably they make almost double. So they'll make 700,000. They made almost $1 million off that property. So it varies. It definitely varies. So many buyers purchase homes with, you know, a variety of the amount. It just depends on how the loan works. Credit unions work differently than banks also. So with the in some conventional loans you can do as low as 3% as well. I had a friend who got a conventional loan for 3%. I didn't understand that you can even get a conventional loan for 3%. So I was like, is that an FHA, bro? Are you sure that's not an FHA? And he's like, yeah, I got a conventional. And I'm like, wow, I didn't even know you can do that. So I've learned as I've went to. So the FHA usually, I mean, yeah, that was a conventional. I thought it was an FHA, but it was a conventional. Just want to make sure I say that clearly. Anyways, now the FHA is a government back loan, so they have higher requirements. Like the home has to be livable because the government is helping you buy it. They usually require at least 3.5 down, and they're designed to help buyers with lower credit scores and limited savings. So it's so like it's so buying homes isn't so discriminatory. If you have like a 580 to a 640 and you're like, oh my God, I only have this and I have $5,000 and I make 35,000 a year, I'm never gonna buy a house. There's programs that are like, okay, we'll give you if you put down 3.5%, we'll give you money for the down payment. But I mean for the closing costs, but you have to have that 3.5% for a down payment, which sometimes only like $5,000, bro. If they pay your closing costs, or they might pay your down payment and you pay the closing costs. It just depends on how it is. but they have requirements. Like the home has to be livable. That means that when the inspector goes through, there can't be nothing wrong with the property, because the government, like I said, the FHA is like, if we're going to give you the money for the property, there can't be nothing wrong with it. Conventional is a little more risky, because it's like you're taking your own money, you're putting 20% down. If you mess up the property, or if you want to repair the property, you're a little more stable. You're not such a risk, because it's your own money. You know what I mean? Like, you can do what you want. So again, the down payment depends on the loan, not just the home price. So why some buyers choose to put more money down, that's strategic. A larger down payment can lower your monthly payments. It can also reduce your mortgage insurance also. So it can make your offer stronger as well. So if there's people putting in different offers on a property, if you put down more money, you might have a higher chance of getting the property in a more competitive market. But choosing to put more down doesn't mean that everybody should. Just, like I said in my other videos, just look at your profile. So let's take a quick look at an example. Let's say that I put down 3.5% and I keep cash in my savings for an emergency and repairs. Somebody else, buyer B, puts down 20% but drains most of their reserves. Neither choice is automatically right or wrong. It just depends on the buyer's goals and comfortable levels. They don't have money for emergencies. They don't have money for reserves, but maybe they make more money. Maybe they can save up more money in 3 months, 4 months. You know what I mean? Maybe they have a dad or a mom they could call, or grandpa. Hey, grandpa, I need 10,000 for this. Just depends on your situation. So you want to look at the bigger picture in general. The down payment is just one piece of the puzzle. You also need plan, like I said, for closing, inspections, moving expenses, and like the whole ownership cost itself. That's why it's a strategic thing, not just percentages. So understanding how payments really work give you the options, and options creates the confidence. So if you're thinking about buying and you want to understand what your down payment really strategically looks like, send me a message. Remember, education comes first. If you're looking to buy, if you're looking to sell, if you just want to know the value of your home, I can help you out. If you know anybody else as well, send them my way. Thank you if you made it this far in my video, and have a blessed day, guys.